The opportunity to work from home has created a lot of exciting opportunities for employees to move around the country and try different places while still working for the same employee. There may be some tax ramifications, however. Today we're going to talk about the convenience of the employer rule. First, the basics. Income is generally taxed where it is earned. All income is taxed in your home state, and if you have sources of income outside your home state, you may owe tax to those states as well. Let's think about a rental property. I live in New Jersey. I have Alabama rental property. I have to pay Alabama income tax on the profits of that property, but I also have to pay New Jersey tax on the same profit. So am I paying double tax? Well, not really. As a New Jersey resident, I'm allowed to take a credit on my state tax return for the taxes that I paid to another state. Now, rental property is pretty easy because the property is where it is and it doesn't move. What about wages? If you live and work in the same state, then no problem. But if you live in one state and your employer's in another state and you work from home, then you need to look at the state laws of both states. Now, for many years, way before the pandemic, New York is a state that had a convenience of the employer rule. So what does this mean? It means that if you work for a New York employer, you pay New York tax on those wages, even if you do all your work in a different state. The only exception would be if you're working away from New York for the convenience of the employer, like your home office is a bona fide satellite office and you see customers there, or there's specialized equipment in some other state that's not available in New York. These are very narrow exceptions. If your New York employer simply allows you to work from home, that's for your convenience, not theirs. And this means the wages are taxable in New York and likely also your home state. Now, New York is happy because they get tax revenue on all the wages. It's your home state that's losing out. Your home state gives you credit for the tax you paid to New York, but it's not like New York sends tax dollars back to your home state. So, to try to even things up, New Jersey just enacted a convenience of the employer rule. This is retroactive to January 1st of 2023. And now, people who live outside of New Jersey but work for a New Jersey company may be subject to New Jersey income tax on those wages if their home state has a similar rule. Well, we already know New York does. So starting from 2023, New York residents who work for New Jersey companies are going to have to pay New Jersey tax on those wages. An Indiana resident who works for a New Jersey company won't, because Indiana doesn't have that same set of rules. Also, Pennsylvania has convenience of the employer rules, but New Jersey and Pennsylvania have a special reciprocity agreement. And so that's what governs how the wages are taxed. So we don't have to worry about this new rule for Pennsylvania residents. Now, does it all wash out in the end? To some extent, but not exactly. First of all, you have to file two state tax returns, a non-resident return where your wages are being taxed, and your resident state return where you have to calculate how much credit you're allowed. This can be sort of complicated, and you may need to pay a tax professional to prepare your returns. This will cost you money. Also, if the state tax rates aren't the same, you may end up paying more tax overall. So your home state's only going to give you credit for the amount of tax you would have paid to them. And so if the non-resident state has a higher tax rate, you're not going to get credit for all the taxes that you paid. And with the advancing opportunities to work from home, I wouldn't be at all surprised if more states enact convenience of the employer rules in the future.